Session 3 will be talking about the preparation of financial statements. So our learning outcomes is to understand the different source documents evidencing a transaction, understand and apply the accounting cycle in day-to-day business transactions, familiarize yourself with the general journal, ledger, and trial balance, and to have a deeper understanding of the debit and credit. So to start, we've already discussed this before on the first part wherein we were talking about identifying business transactions, diba? When can you say that a transaction is considered as a business transaction and when is it accountable? So when you say business transaction, it is any event that affects the financial position of a business and can be recorded reliably. It involves exchange of values. So again, there is exchange of values. There are transactions within the organization like recognizing the used portion of supplies as expense, or with outside entities or persons like purchasing supplies either for cash or on account. So business transactions can happen internally or with outside entities. Now, in order for you to be able to fully identify if it is a business transaction or not, we have what we call as source documents. So, transactions and events are the starting point in the accounting cycle. By relying on source documents, transactions and events can be analyzed as to how they will affect performance and financial positions. Thus, source documents identify and describe transactions and events entering the accounting process. So source documents are considered original written evidences containing information about the nature and the amounts of the transaction. Now, here are the common source documents that you may or may not recognize. So we have the sales invoice, cash register tapes, official receipts, bank deposit slips, bank statements, checks, purchase orders, time cards, and statement of account. So again, as I mentioned, source documents, it will serve as a basis of identifying business transactions. So most likely, if you have these source documents like invoice, OR, checks, purchase orders, those information written inside these documents or contained in these documents, those are considered as your business transactions and thus they are accountable. So after we have identified these business or after we have identified the business transactions, what follows next is the analyzing. So by analyzing, we have to ask ourselves, what is the value received and the value parted with? So again, what is the value received and value parted with in this particular transaction? Now, if you can remember, the terms value received and value parted with was already discussed in our session 2, which is the concept of debit and credit. So, 'di ba? Again, after identifying we will now move on to the transaction analysis. So in analyzing a transaction, you should follow these 4 basic steps. First is to identify the transaction from source documents. So given if for instance sales invoice, kung sa man imong transaction na of course na kay sales, so na kay gibaligya. Kung purchase order, ikaw pud ang ni order, di ba? Kung time cards, so it has something to do with payroll baron, di ba? For bank deposit slips, you are of course depositing cash in the bank, or statement of accounts, there are billings. So you need to identify the kind of transaction from the given nga source document. Next is to indicate the accounts affected by the transaction. So what accounts are affected? So you already know these accounts, no? The assets, liabilities, equity, income, or expenses. So given the source document, unsa na accounts ang ihang ma-affect? So for instance, sales invoice, kung nakay sales invoice, of course, ang affected accounts nimo is imuhang sales, di ba? Or na kay sales and then napod kay cash or accounts receivable. It will depend. So your asset account is affected and also your income account. So that is why it is very important for you to really understand the elements. Katong nasa session 2, dapat makahinumdum gyud ka kung unsa ang nabilong sa asset, unsa ang nabilong sa liability, equity, income, o expenses. Kay if wala ka kahibaw kung unsa na nga klase nga account, is yabo na siya detso. Like GG na ka, di ba? If you don't know nga asset day ang affected ana, or if you don't know nga kana day nga value is asset day na siya, wala na. Dili na ka makapadayon og analyze or makapadayon sa imong counting cycle. So that is why always or as much as possible, if kailangan, di ba, is imo ang ma-memorize unsa tong mga account titles under assets, liabilities, equity, income, or expenses. So mao gina siya, kay dapat kay bapod ka sa ilahang mga descriptions, di ba, or unsa na nga mga type of accounts. Like for example, how can you differentiate an accounts payable from a notes payable, di ba? So kung ingon tag accounts payable, kasagaran na is oral promise to pay ra, while notes payable is nag-issue kag promissory note or nakay written agreement to pay, di ba? Na so again, ako yung i-emphasize, balik mo aton sa session 2, katong mga different kinds of accounts, dapat kay baw mo unsa na siyang account, o unsa nga transaction ang na-involve na, or unsa description ana nga account. So like example, katong mga prepaid expenses, di ba? What are prepaid expenses? Prepaid expenses are assets nimo, di ba? So abig basin niya, abig na I word nga expense, kay magtuo na ka nga expense account na siya. But then again, I word nga prepaid, so meaning mo na siyang expenses nga imong gibayaran in advance, mo na considered as asset pa nimo siya, di ba? Kay wala pa nimo siya nagamit. So ana siya. How about unearned income, di ba? Unearned income, you might think kay abig na income sa iyahang account title is abi ninyo abi nimo nga income account na siya, but then unearned income is considered as a liability. So again, ako yung balik-balik kong emphasize, familiarize yourself, or if kaya, memorize kung unsa nga mga account titles ang nabilong ato sa asset, liab, equity, income, o expenses. Kay dito na magsugod tanan. If you don't know how to identify those accounts and how are they affected, diba, is dili na ka makapadayon yun sa process. Next is ascertain whether each account is increased or decreased by the transaction. So mo sa niyang gi-emphasize, diba, dito sa session 2 nga kung ano nimo, kung ang iyang effect ba is an increase in that account or a decrease in the account. So kani is diri nimo hinumduman ang katong iyang normal balance, diba? So diri mo come in ang ihang normal balance. So whatever the normal balance of the account is, kana siya ang makapa-increase niya, di ba? Or mo na siya kana nimo ang imong gamiton para mo increase ang iyang account. So ihang normal balance is katong diha siya mo increase. Or for example, your cash iyang normal balance is debit, di ba? So kung ganahan ka mo increase ang imuhang cash, is imuha siyang i-debit, di ba? Inana siya. So again, always remember the normal balance. And then lastly, or number 4 is using the rules of debit or credit. Determine whether to debit or credit the amount to record its increase or decrease. So in relation na ni siya sa imuhang number 3. So again, rules of debit or credit. Technically, when you say debit, it is the value you receive. Diba? Mo na siya. Kung kag debit, value you receive. credit is value you parted with. Ano siya? Sa business, again, debit, value received. Credit is the value you parted with. Now, kung i-determine mo whether to debit or credit the account, i-relate na nimo siya adto pod sa imuhang normal balances. So, kana siya. If your account is ang ihang, as I mentioned ganiha, if ang imuhang purpose for the account is to record its increase, again, if ang imuhang purpose sa account is to record its increase, and ang iyahang normal balance is per se, iyahang normal balance sa account is credit. Now, unsaan man yung pag-increase sa iyahang account? Now, if you increase the account with a normal balance of credit, of course, ang imong buhaton is to credit the account. Mo nang akong i-emphasize ninyo nga dapat makahinumdum gyud mo sa normal balance sa kada account. So, for asset, ang normal balance sa asset is debit. So, meaning, kung ganahan ka mag-increase sa asset na amount, imuha siyang i-debit. For liabilities, ang iyahang normal balance is credit. So, kung ang effect sa transaction is maka-increase siya sa imuhang liabilities, meaning ang liability account, kaimuha siyang i-credit. Now, for equity, iyahang normal balance is credit. So, meaning, kung kailangan ka mag-increase sa imuhang equity or the effect of the transaction is an increase in equity, therefore, the equity account is credited. So, kagets mo nang mingon yung ang normal balance is kana siya ang diha nga account nga mo increase ang kanang specific nga account. Now, for the income, ang iyahang normal balance is credit. Diba? Normal balance income is credit. Nganong credit man ang normal balance income? Kaya diba in general, ang effect sa income is the same. Ang effect sa income ang income ng expense, kay di ba ang iyahang mga amounts is mo reflect adto sa imuhang equity. So, meaning, unsa iyahang effect sa imuhang equity. So, ang income nimo is maka-increase baya siya sa imuhang equity. Now, unsa may maka-increase sa imuhang equity, di ba? Mo-increase ang imuhang equity kung imuha siyang i-credit. So, manang the same ang normal balance sa imuhang income o imuhang equity. So, again, if there is an increase in your income, imuha na siyang i-credit. Now, for the expense, is the opposite. Expense, the normal balance of expense is debit. So, kung naa kay increase in expense, imuhang i-debit ang expense account. So, kana siya. Muna, again, familiar or at as much as possible, you need to really understand katong nasa session 2 kay para makapadayon ka anisa or para makamake kag proper analysis. Now, let's move on to the accounting cycle. So, the accounting cycle involves these steps. First is the documentation, wherein you are analyzing business documents or katong mga source documents which serve as a basis of recording transactions. So, documentation. Next is journalizing. So, this refers to the recording of business transactions in the journal to have chronological records of economic activity. Step 3 is posting, wherein the information in the general journal is transferred to the general ledger to create a record of classified accounts. Excuse me. Step 4 is preparation of trial balance. So, a trial balance is prepared to prove the equality of debits and credits in the general ledger. Step 5 is adjusting entries. It is making end-of-period adjustments before financial statements are prepared so that the income and expense in the income statement are reported at their correct amounts. Step 6 is worksheet, wherein a worksheet is prepared to facilitate the preparation of financial statements. Step 7 is the financial statement itself, wherein you are already to prepare the following. income statement, balance sheet, statement of cash flows, statement of changes in equity, and the notes to financial statements. Now, step 8 is journalizing and posting closing entries. So, the objective of closing entry is to transfer the revenue, expense, and drawing accounts to the capital account. Step 9 is the preparation of a post-closing trial balance. And step 10 is the reversing journal entries, which are made at the start of the next period. Now, for session 3 is we will be focusing on journalizing, posting, and the preparation of trial balance. So, ara ta focus with a little bit of worksheet. Kaya ang worksheet is ma-apply man po na to. So, kana ato ang focus diri for session 3, journalizing, posting, and preparation of trial balance. Now, before we can start with journalizing, we have here what we call the chart of accounts. Okay, chart of accounts. It is a list of assets, liabilities, revenue, expense, and capital accounts applicable to the business enterprise. It normally includes brief description of the nature of transaction, identification numbers, dara, makita na ninyo sa first column, and the katong type of account, usang account title. So, the company or each company has its own chart of accounts. It is specific to what kind of industry or business the company is involved in. Now, as you can see here, di ba na siya yung mga identification numbers and then na ay corresponding nga account titles. Kung unsa ang naa sa chart of accounts, maurasad na imuhang gamiton sa imuhang pag-journal entry. So, dili pwede nga naa kay account sa journal entry o nakigigamit nga account sa journal entry nga dili makitaan sa imuhang chart of accounts. So, dili ka magbuot-buot ha. Nga for instance, ang naa sa imuhang, for instance, nipalit og supplies ang company, instead of writing office supplies, ang imong gibutang is supplies ra. So, kana siya is considered as wrong na siya. Kung unsa ang nasa chart of accounts, kung unsa ang naadre, word per word, maura gid na ang imuhang gamiton niya sa imuhang pag-journalize. So, ana siya. Muna imuhang chart of accounts. Now, atong zoom out. The chart of accounts is naka-classify siya as to the type of account. Kung asset account ba siya, liability account, equity account, revenue account, or expense account. So, kana naka-specify or naka-classify gina siya.